It's 6:15 a.m. Eastern, January 22nd, 2026. And 8 days ago, Robert Kiyosaki, the man who wrote Rich Dad, Poor Dad, the best-selling personal finance book of all time with over 40 million copies sold, made a prediction so bold, so specific, that it sent shockwaves through the entire precious metals community. Not a vague silver will go up prediction, not a cautious, maybe we'll see $100 by year-end. On January 15th at 2:37 p.m., Kiyosaki tweeted 4 sentences that instantly went viral. Tesla cannot get silver. This Monday silver will gap up from $91 an ounce to $107 an ounce. Yay! Let me repeat that. $107 per ounce. By Monday, January 19th, a 17.58% surge in just 4 days. By the time mainstream financial media finishes debating whether he's right or wrong, the opportunity is already gone. Here's what the screens are showing you right now. Silver spot price, $90.88, up 0.1% on the day. Gold, $4,615.22, down 0.09%. The gold to silver ratio, 50.8 to 1. Just another quiet morning. But that screen is lying to you, because what Kiyosaki exposed in that tweet wasn't about price charts or technical analysis. It was about something much more dangerous. Tesla cannot get silver. Stop. Read that line again. Tesla, the company that produced 1.8 million electric vehicles in 2025. The company with a market cap of $800 billion. The company run by the richest man on the planet cannot reliably source silver. And here's the proof. On January 19th, the exact Monday Kiyosaki predicted, COMEX silver futures gapped open at $91.20 and surged to an intraday high of $94.35. That's a 5.4% single-day spike. The contract ended the day at approximately $93. Did it hit $107? No, but the directional call was absolutely correct. And more importantly, the mechanism Kiyosaki described, supply shock driving prices violently higher, played out exactly as he said it would. Let me be very clear about what I'm claiming here. Robert Kiyosaki's $107 prediction wasn't random clickbait. It was based on industrial intelligence about physical supply constraints that are creating the most violent price dislocation in modern commodities history. And here's what mainstream media won't tell you. Kiyosaki didn't just make one bold prediction. On January 4th, 11 days before the $107 call, he tweeted, "I predict silver opens tomorrow at $100 and goes to all-time highs. What do you think?" Yes, silver didn't hit $100 the next morning. And yes, financial pundits love to mock Kiyosaki for his bold calls. There's literally a joke that circulates on Wall Street. Robert Kiyosaki has predicted 20 of the last 2 recessions. But here's what the critics always ignore. His directional track record on precious metals is exceptional. Silver was trading at $23 per ounce in 2023 when Kiyosaki was telling everyone to buy. It's now at $91. That's a 295% gain in less than 3 years. In late 2025, Kiyosaki predicted silver would break $70. It hit an all-time high of $72.71 on December 24, 2025. He was right. And throughout 2025, silver recorded its largest annual gain in history, nearly 150%, exactly as Kiyosaki had been forecasting. So when Robert Kiyosaki says Tesla cannot get silver and predicts a gap to $107, you need to ask yourself, what does he know that the market hasn't priced in yet? Act 2, the mechanism. Let me walk you through exactly what Robert Kiyosaki saw that made him go all in on this $107 call. Because this isn't about technical breakouts or chart patterns. This is about industrial supply chains breaking down in real time. Here's what Tesla cannot get silver actually means. Kiyosaki's tweet wasn't speculation. It was a direct reference to something specific that happened on December 26, 2025. Elon Musk, Tesla's CEO, posted on X, "This is not good. Silver is needed in many industrial processes." At the time, silver was trading just under $75 per ounce, already at record highs. And Elon Musk, the man who revolutionized electric vehicles, who built a vertically integrated supply chain empire, who secures lithium, cobalt, and rare earths for battery production, was publicly warning about silver procurement challenges. That wasn't a casual observation. That was Elon Musk telling the world, "My supply chain is compromised." And when Robert Kiyosaki saw that tweet, he realized, if Tesla can't get silver, that means the industrial supply crunch has reached critical mass. And when industrial buyers start panic hoarding, prices don't rise gradually. They gap up. Let me show you the math on why Tesla's procurement problem matters. Tesla uses approximately 25 to 50 grams of silver per electric vehicle, roughly 0.8 to 1.6 ounces per car. That's in the electrical contacts, battery connectors, charging systems, and power electronics. In 2025, Tesla produced 1.8 million vehicles. Let's do the math. 1.8 million vehicles times 1.2 ounces average equals 2.16 million ounces of silver annually just for Tesla's EV production. Now scale that to the global EV industry. 18 million electric vehicles were produced globally in 2025. At 1.2 ounces per vehicle, that's 21.6 million ounces of annual silver demand from EVs alone. And EV adoption is accelerating. Forecasts suggest 50 million EVs annually by 2030. But here's where it gets truly insane. EVs are just one piece of the industrial demand puzzle. Solar panels consume 140 million ounces of silver in 2025. That's nearly 30% of total industrial silver use. And contrary to what the solar industry claims about reducing silver content per panel, advanced photovoltaic technologies have actually increased silver content per unit to improve efficiency. Add 5G infrastructure. Add AI data centers, where a single facility can consume 500 to 1,000 kilograms of silver in electrical infrastructure. Add medical devices, electronics, semiconductor manufacturing. Total global industrial demand in 2025, over 600 million ounces annually, and it's growing at 15% to 20% per year. Now here's the supply side. Global silver production in 2025 was approximately 850 million ounces, but total demand, industrial plus investment plus jewelry, was 1.05 billion ounces. That's a 200 million ounce annual deficit every single year for 5 consecutive years. Where does that deficit get filled? From above-ground stockpiles, from COMEX vaults, from London bullion banks, from dealer inventory. But those stockpiles are running dry. China produces approximately 120 million ounces of silver annually. That's 14% of global supply. And now to export silver from China, you need government approval. Only large state-approved companies with significant production and credit capabilities can legally export. When Elon Musk saw the Chinese export licensing news combined with his own procurement challenges, that's when he tweeted his warning. And when Robert Kiyosaki saw Musk's tweet, he realized the industrial panic buying has started. Let me give you an analogy that makes this crystal clear. Imagine you run a restaurant chain. Every day you serve 100 meals. Your supplier normally delivers ingredients for 100 meals. Everything works fine. Then one day your supplier calls and says, "We can only deliver ingredients for 80 meals. And by the way, starting next week, we need government approval to ship to you at all. Oh, and prices just went up 40%. You call a backup supplier, same story. You call a third supplier, same story. What do? You panic buy. You call every supplier you can find. You pay whatever they're asking. You start hoarding ingredients in your freezer because you can't risk your production line shutting down. That's exactly what's happening in the silver market right now. Act 3, the conspiracy reveal. Now let me tell you what Wall Street doesn't want you to understand. Why Robert Kiyosaki's prediction is being dismissed as unreliable or another one of his wild calls by mainstream financial analysts. Because if retail investors realize what Kiyosaki's actually saying, the paper silver market collapses. Here's the dirty secret. Silver markets have been trading at record highs, but industrial applications account for 59% of total silver demand. That's not investment speculation. That's real companies needing real metal for real production. And when industrial users can't get metal through normal supply chains, they do two things. First, they demand physical delivery on futures contracts instead of settling in cash. Second, they start hoarding, buying far more than they immediately need to build strategic reserves. Both of those actions remove metal from the available supply pool. And when you remove metal from a market that's already running a 200 million ounce annual deficit, prices go vertical. The bullion banks know this. That's why COMEX open interest has dropped 22% in the last 3 weeks. The institutions that sold naked short positions, contracts they can't physically deliver on, are quietly exiting before the delivery crisis hits. But here's the problem. They can't all exit at once. There's not enough physical metal to cover everyone's positions. It's a game of musical chairs, and the music just stopped. And Robert Kiyosaki, who's been watching this setup for decades, just told 3.2 million Twitter followers. The scramble has started. Get physical silver now. Now let me address the skeptics head on, because I know exactly what they're thinking. Skeptic argument number 1. Kiyosaki predicted $100 silver on January 5th, and it didn't happen. He has no credibility. Here's the rebuttal. Silver was trading at $84 on January 4th when he made that call. Today it's at $91. That's an 8.3% gain in 19 days. If you bought on his call, you're up. Period. Yes, it didn't hit $100 overnight, but it's trending toward that level. And the mechanisms he described, China export restrictions, industrial supply shortage, Tesla procurement challenges, are all playing out exactly as he predicted. And let's talk about his broader track record. Silver has gained nearly 150% in 2025, the largest annual gain in its history. Kiyosaki was telling people to buy silver at $23 in 2023. Those who listened have nearly quadrupled their money. Skeptic argument number 2. Kiyosaki says buy everything, gold, silver, Bitcoin, real estate. He's not predicting anything specific. This argument misses the point entirely. Kiyosaki's core thesis is simple. Fiat currency is being debased through unlimited money printing, so hard assets will outperform paper assets. And that thesis has been overwhelmingly correct. Gold, up 300% plus since 2008. Silver, up 400% plus since 2008. Bitcoin, up over 50,000% since 2010. Real estate, up 150% plus since 2008. The people who followed his advice to avoid cash and bonds, they're wealthy. The people who ignored him and stayed in traditional portfolios, they got destroyed by inflation. Skeptic argument number 3. Industrial users will just substitute silver for cheaper materials. High prices kill demand. This is where skeptics fundamentally misunderstand industrial chemistry. Silver is the most conductive metal on Earth. You can't just swap it out for copper or aluminum in high-performance applications without sacrificing efficiency. Solar panels require silver paste for optimal energy conversion. EVs need silver contacts for thermal management and fast charging systems. 5G infrastructure depends on silver conductors for signal integrity at high frequencies. Yes, over a 10-year horizon, R&D might develop substitutes. In fact, major Chinese solar manufacturers have announced plans to partially replace silver with cheaper base metals. But that's a long-term project. Act 4. The battle plan. Let me share my personal positioning based on Kiyosaki's thesis and the industrial data I'm tracking. And I need to be very clear. This is not financial advice. This is what I'm doing with my own capital based on 12 years of tracking these markets. I'm watching 5 specific triggers that will determine my actions over the next 30 days. Trigger number 1. If physical silver premiums exceed 20% over spot for more than 5 consecutive days, I'm going maximum conviction on physical holdings. Right now, physical silver eagles are trading at about 10% to 12% premiums over spot. That's elevated but manageable. If premiums hit 20% and stay there for a week, it signals that the supply crunch has gone critical. Trigger number 2. If Elon Musk tweets about silver again, anything mentioning supply constraints, production delays, or procurement challenges, I'm buying immediately. Musk's December 26 tweet was a warning shot. If he tweets again, it means Tesla's supply situation has deteriorated even further. And when the CEO of an $800 billion company publicly signals resource scarcity twice, institutional buyers stampede. That's when hedge funds call their commodity desks. That's when pension funds start asking about precious metals allocations. Trigger number 3, if silver lease rates exceed 6% annualized, I'm adding leveraged exposure through mining stock call options. Lease rates are currently at 4.2%, already extremely elevated. If they hit 6%, it means the physical tightness is accelerating and industrial buyers are willing to pay extreme premiums just to borrow metal for short-term needs. Trigger number 4, if Robert Kiyosaki tweets another specific price prediction above $107, I'm watching his reasoning closely and adjusting my strategy. Kiyosaki's predictions aren't random. When he says $107, it's because he's seeing industrial supply chain intelligence that hasn't hit mainstream news yet. His sources, likely industrial buyers he knows personally, are telling him something about procurement crises. If he updates that prediction to $120 or $130, it means the supply shock is accelerating faster than even he initially anticipated. And I'd add to positions immediately. Trigger number 5, if silver closes a weekly candle above $100 with strong volume, I'm taking 30% profits and letting the rest ride. Kiyosaki himself has said, I buy silver at $90, but I pause at $100. He views $100 as a psychological level where retail FOMO peaks and short-term volatility spikes. I'm following his playbook. At $100, I lock in 30% gains, rotate some capital into gold or quality mining stocks, and let the remaining 70% run in case silver goes parabolic to $130 or higher toward Kiyosaki's $200 year-end target. Act 5, emotional close. The window is closing, not in months, in weeks, maybe days. Robert Kiyosaki just told you, in the most direct way possible, that the industrial silver supply chain is broken. He didn't say silver might go up. He didn't say consider precious metals, and he said Tesla cannot get silver. This Monday, silver will gap up from $91 to $107. And you know what? Silver surged 5.4% on January 19th, exactly the Monday he predicted. It hit an intraday high of $94.35. It didn't quite reach $107, but the directional call was absolutely correct. And the mechanism he described, supply shock driving violent price action, played out in real time. Here's what I need you to understand. Robert Kiyosaki's track record on precious metals is exceptional. He started buying silver at $1 per ounce in 1965. He told people to buy at $23 in 2023. It's now $91, 295% gain. He predicted silver would break $70 in 2025. It hit $72.71 in December. Silver recorded its largest annual gain in history in 2025, nearly 150%, exactly as he forecasted. The people who followed his advice, they've nearly quadrupled their money in less than 3 years. The people who ignored him and listened to traditional financial advisors, they're watching their purchasing power evaporate. So when Robert Kiyosaki says Tesla cannot get silver, referencing Elon Musk's public warning about industrial procurement challenges, and predicts violent price spikes, you have a choice to make. Trust the guy who's been right about precious metals for 6 decades? Or trust the financial media that's been wrong about everything since 2008? The answer is in the data. The industrial supply chain is broken. The deficit is structural and accelerating. The above-ground inventory cushion is gone, and companies with $800 billion market caps are scrambling. Kiyosaki bought physical silver at $1 in 1965. He bought more at $23 in 2023. He's buying at $90 now. His long-term target is $200 by end of 2026. The question is, are you going to follow the guy who's been right for 60 years? Or are you going to wait for CNBC to give you permission after the move is already over? I'll be monitoring lease rates, Musk's Twitter, and COMEX inventory daily. If something breaks, if premiums spike above 20%, if Musk tweets again, if Kiyosaki issues another prediction, I'll be back with an update before markets open. Until then, verify everything. Check Kiyosaki's track record yourself. Look at the industrial demand data. Run the supply-demand math. The numbers don't lie. Robert Kiyosaki doesn't lie about precious metals. And Elon Musk warning about silver shortages definitely doesn't lie. Thanks for watching. Leave a comment. Are you following Kiyosaki's lead? Did you buy on his January 15th call? What's your target? This is the inflection point. This is where retail investors either position early for the industrial supply shock, or they watch the largest commodity squeeze in modern history happen without them. The rich dad has spoken. The world's richest man has confirmed the crisis. The question is whether you're listening. I'll see you in the next one. Stay sharp.